Hello and welcome to Weekend Investing Daily Bites. Today is episode 199 and 22nd of March. We are coming very close to now the financial year close, and 2021-22 certainly has been a very eventful financial year. Today we're going to talk about the importance of process over expectation. So, why we want to focus on the process of investing rather than doing something with the expectation of past results. So, and we'll see how we have been doing this at Weekend Investing. First, the markets. The markets were opened down, but throughout the day there was recovery in the market, and most sectors gained ground except FMCG, real estate, and pharma. IT led the rally with plus 2%. Energy stocks, auto stocks, infra stocks were all up. Nifty ended up plus 1.2%. With today's move, the last 1 week has been reasonably green for all the sectors, and many for the last month also. Metals have still come out as the major winners over 1 week, 1 month, 3 months, and even for the financial year, clocking the best returns at plus 59%. And of course, the worst performer this year so far are the private banks and FMCG stocks and the PSU banks. All have virtually not moved net in the current financial year, and the best ones, as I said, are metals, IT, energy, real estate, commodities, and some of the other ones within commodities. We have missed out sugar here. Sugar has also done extremely well. So a good day overall. After 2 weekdays, we had a nice spring back up, and let's see where we go from here. So as I said, Nifty closed at plus 1.2% roughly, and the difference today again was that large caps were going up, whereas small and mid caps were largely flat or slightly in the positive, but not really gunning up like Nifty. Nifty primarily being pushed by Reliance and ITC, and within the weekend investing small cases also we had reasonably robust gains between 0.5% and 1.5%. MI25 doing quite well despite small caps being subdued at plus 1.4%. One of the very unique parts about MI25 has been that it is at zero drawdown. So despite small caps being in drawdown, MI25 is riding its all-time high, and it's up 62% for the financial year so far. So it's really very I would say repetitive of what we have seen with MI25 over the last many years, and it has always proven to be a good performer in the small cap space. And with this, I also want to welcome so many new users who have come in through the Holi offer. We had opened all the strategies for few slots, and a lot of people have been able to come in via that route. In today's market, the top gainers in CNX 500 universe were Chalet Hotels at plus 12%, Mahindra Holidays and Ratnamani Metal at plus 10% approximately. Shoppers Stop went up at plus 9%, and Schneider Infra was up another 8%. So very stock specific movement. Future Retail was smashed 14.8%, and Future Consumer minus 11%. Wockhardt, which was up yesterday, is down 4.4%. Dhani Services continues to fall. Kaplan Labs also was down along with Dhani at nearly 4%. In terms of the market action, yesterday we had a bearish engulfing candle on the Nifty on the daily candles. So that was a reasonably bearish sign. But today, if you see very closely, Nifty took a very good support at the 200-day DMA exactly at 17,000 and has bounced back. Now, if it clears the previous 2 days high, then I'm expecting that this run can probably go up to 17,800 in this current leg. So, if that happens, that will be really nice. But then, if it does come down, we will have to again retest the 200 DMA and see where we go now. But 200 DMA, although any DMA does not have any speciality about it, but because a lot of people are watching 50 DMA, 100 DMA, 200 DMA, there is a price action point that happens around that DMA. Otherwise, there is nothing special about 200, and why not 202 and why not 198? But it is just because of the human psychology around certain specific points that the market reacts this way. Another insight was on oil. So this is a monthly chart of oil, and while it is not showing you the recent run up to 139, which was intra month, but it is reasonably on the boil, and we are about to hit at the end of the month a 10-year high on monthly charts. So oil is still going very strong. We should not write off the oil move, because this is clearly a bull run in oil, and if this continues for some time, there will be some issues that India will face. So from this perspective, this still remains a major headwind for our markets. So the topic of discussion today, process over expectation. So a lot of people will basically look around what are the returns of any fund or any small case, or any stock in the last 12 months, 24 months, so on and so forth. But I think we should also give more credence to the fact of the process behind it, because if the process is right, the process is sound, then the returns will come automatically, and you will not have to chase those particular products for returns. So find vehicles which are right in process, and the expected returns will come automatically there. So in process basically means what are the investing rules, how are the assets getting allocated, the conviction of the manager, your conviction on the manager, and how the risk is getting managed, whether it is in terms of position sizing, whether it is term of money management. So basically concentrate more on the process, and the expected performance will come in through. And we are showcasing one SIP strategy on a CNX 200 20 stock portfolio that I am running. So we are doing weekly SIPs in this, and publicly declaring the results here. So started this beginning of October, and as I am saying here, we are not in the business of timing the market. We will continue these SIPs. What we have to only ensure is that the strategy which these SIPs are following is a self-correcting strategy. What I mean by that is, a self-correcting strategy is one where it will take care of the winners and losers in the right way. So in our strategy, which is a momentum strategy, the winners will be allowed to run, and the losers will be cut short once they go below some rule of the strategy. So it is like a you can say survival of the fittest theory, where stocks which are not performing well will get changed and removed, and new stocks which are performing well will come in lieu of that. So it's a sort of a self-correcting strategy. Something is going wrong, it will self-correct, and what is going right, it will not touch that, it will allow it to go further. So even index is a self-correcting strategy. So index, every 6 months they will churn the index with performing stocks will come in, and non-performing stocks will go out. So index is the simplest form of a self-correcting strategy, where without doing anything else, the strategy itself will take care of its performance to a large extent. So have a self-correcting strategy as a base, and then you keep adding SIPs to it without bothering about the timing in the market, because 99.9% people, including myself, cannot time the market. and you need not worry about the timing of the market. We are in a growth market, and with a reasonably good runway, you can really make good compounding if you don't panic when the market falls. So we've done 25 sips in this strategy. It's a slow strategy. It is not like most of our fast running strategy. It's a slow strategy, larger cap oriented strategy. Original portfolio is up 4%. We are up now at plus 5.69% on the XIRR. So nothing great so far, but all this while, since October, while the market has been falling, there is no panic also. So there is no concern also. XIRR may have dropped to minus 10% also at some point of time. But we know that over time this will perform, and that is why I'm showcasing this, so that people will get encouragement and will be motivated to start a self-correcting strategy with SIPs in it. Also today, MI35 clocked its first 2x stock. So MI35 is a strategy of small and mid caps, momentum strategy on 35 stocks. So it's a very well diversified strategy meant for mid and small cap stocks. And BSE was one stock which came into the strategy by mid October, I think. And from mid October, it has already doubled since then. So this is the first doubler since this strategy started in August, and I am reasonably pleased about it, because when it came into the strategy at this point, I wasn't expecting this to do well, because the BSE had run up already substantially. But again, as I always say, don't let your biases come in the way. Let the strategy do what it is doing, and that's what it has done. It has doubled in this particular scenario. So again, showing you the MI35 chart. So since the market started falling mid of October, while the small cap 250 has down by 8%, this strategy is up by 2.4%, and hence it is outperforming while the market is going down. And I am very sure when the market will go up, as it is now, it will outperform on the way up also, as is being shown in this chart. This is a chart since 2016, so last 6 years of simulated performance of this strategy. And you can see that when the blue line is the index and the orange line is the strategy. So when the blue line fell from 2018 180 down to nearly 80, so that's a huge fall of almost 60%. The strategy fell from 216 to 144, so about 30 odd percent down, or 33% as mentioned here. So drawdown was lower than the benchmark, and on the higher side, of course, the returns have been 402% versus 132 in this period, thus giving you a CAGR of almost double of the benchmark. So again, process. Don't worry about the returns, because if the process is right, the returns will automatically come. This is all I had for today's video. Thank you so much for watching. Do like, subscribe, and share this channel with your friends and family. I believe a lot of people still have to experience the markets and make their first investment in the markets. So do help them on this road of a progressive financial management of their funds. Thank you so much, and I'll see you in another video. Bye.